Hi, and welcome to the Market Alert for Thursday, the 28th of April 2022. So FANG and FUBAR bonds and Boeing battered as dollar index nears 20-year highs. Spoken about this for a few weeks now in the Market Alert, that 103 area, well, that was hit yesterday and overnight it's gone straight through it. The dollar index took out the COVID crisis highs of March 2020 during yesterday's session. And US market wrap, stocks pause as dollar index firms amid China lockdowns, peak earnings seasons and the EU gas crisis. Yes, all of the European countries that have gas from Russia, they capitulated and ended up paying in rubles yesterday, according to the Bloomberg news that was released yesterday. Dollar index hits COVID crisis highs, pride goeth before the US dollars fall. Yep, you'll see the dollar continue a lot higher where it is at the moment. News for today, this is the one the market's waiting for. Advanced GDP, as I mentioned in Monday's market alert, 6.9 forecast as previous 6.9 forecast 1.1. Now this could be a bit of a ruse by the powers that be so that it comes out greater than 1.1, allows the stock market to go up even if it comes out at 1.5. Oh, it's better than the forecasted figure without actually taking into account it was 6.9 before. So the forecast figure will be the focus. So if it comes out, like I say, 1.5, 2.5 or whatever, oh, it's better than it was, so we're all right. It's smoke and mirrors economics, this is. And again, just to remind you, the quarterly report is up on the live trading section, member section of the site. You look for example 39. They're normally in chronological order, but yours truly had to upload it himself, and for some unknown reason I can't get it to be at the bottom. But not to worry, it's there. Go and have a look at it and you'll see all the statistics, etc. for from the 1st of February to the 19th of April. Gold silver ratio, you can see this is really nudging up now. Let me just bring the chart down a bit and move it across. In fact, let me just change this to the monthly, and you'll see that we've broken out of that sideways move that I was talking about, or we're just about to. Let me just change the colour. So yeah, you can see we've got this sideways move, just about to break out to it. The all-time high is 126 ounces of silver to 1 ounce of gold. Will we see that? Who knows? I'll show you why in just a moment. Silver yesterday, they're continuing to be. There's a lot of volume in the silver market. On Tuesday, it lightened up a bit. Wednesday, it started to increase again, and there's downside pressure in this market as well. So let's move on, have a look at the Dow first. Yesterday there was some buying support in the Dow, which you can see here at the 78% retracement. That's still holding really well there, and it looks like the support overnight to move to the upside at the moment. But of course this all depends on the GDP figures at 1:30, so keep an eye on those. Yesterday we saw the Dow move down, but when it kicked off in the cash market, the market moved higher and then it got sold down to the previous day's low, which is the magical area, isn't it? And the volume oversold, momentum starting to shift, and the market was brought back. In the German DAX, a bit quieter than the Dow, but also trading back to the 78% retracement. And there's the 89 just sitting below the low. Once again, huge demand yesterday to hold these markets. It looks like we're set to move to the upside. Again, it's going to need that support from the US GDP numbers. And in the 30-minute chart, you've got yesterday we kicked off on the downside. We then did a straight reversal, and the market just continued to move up until we got to lunchtime. Then it got a bit hysterical, as the market traded up and down on news that the European countries had actually paid for the Russian gas in rubles. Didn't like this one bit. And also there was an agreement by the UK to support the Ukraine if they wanted to go across the border and start bombing the mainland of Europe as well and taking the fight over the border. Not a good idea. Not a good idea at all. But that was released yesterday. And so the DAX continuing to just stay in a choppy sideways range, and still is at the moment. Needs to take out yesterday's high to continue to the upside. If not, then we will see the market come down and test the DP level. But like I say, all of this is dependent upon the GDP figures at 130. So yesterday morning, the futures market in the DAX moved higher. It then pulled back. We then had a double top retracement before the market sailed south, oversold, lots of volume, down to the DP, not the DP, the BRN level there. And then you've got, in fact, let me just bring this up a bit here. There you go. You can see just above the BRN there. And also we've got the volume, the crossover, and then the green parabolic, and off we went to the upside. And then the market just became sideways, stuck within a range. Whether it was the day before the GDP numbers, who knows. But the market trading sideways there, and till the 2:30 kickoff. You can always see the 2:30 kickoff because the volume kicks in again. Markets oversold, supply, and then we start to see the parabolic and the red change, and the market comes back. But then the Dow reversed after the first 30 minutes and moved back to the upside, and the DAX followed suit, and you can see they're coming back a couple of 100 points, and overnight very much sideways in a 50-point range at the moment. And finally, let's have a look at currencies. So we've got the GBP, JPY. This is now moving off the 89% that it put in yesterday. Huge demand here as well, oversold. These are the upside targets for it to move back to the upside. And here you can see it was very sideways as it built all of that demand, stuck in a range of just under 100 points. Yeah, it's definitely a 100-point range because we're below this blue line, but not quite above that one. So added together, it'll bring you over just over 100-point range. You can see overnight the markets are also moving to the upside sharply there as well. In the pound, continuing to move lower, and not as much as you'd expect given how much the dollar index has moved, and we'll look at that in just a moment in more detail. Heading down to these lows, we need to look at the monthly chart. We're now at 62% in the monthly chart. The next downside target is 120 for the pound, and I think we're going down to these sorts of levels, if not all the way down to the 114, as the dollar continues to move very sharply to the upside. Yesterday was a bit choppy in the 30-minute chart, but still a 100-point range there in the pound. And then finally, the metals, well, they're getting crushed because of the US dollar moving to the upside. You can see we've gone through the 89% retracement. We've gone through the 78% retracement, now drawn from there up to there and back. At the 89 here, that's the next downside target. We're going down to $20 for my money. There's no stopping the dollar rising at the moment. It's now become parabolic and moving to the upside. I don't want to see silver go down any more than anybody else, but 21.93, 22 is going to be easily achieved. We're already at $23 if we look at the 30 minute. There you go. It's just done that. So we're already at 23. We break 23, and then we continue down to, like I say, 21.97. Very, very important area. If that doesn't hold, then we have to look a lot lower. I'll have to bring up a monthly chart once we take out this low here at $22. There's nothing we can do about it. It's getting crushed because it's inversely related to the US dollar, which you can see here is continuing to move to the upside very, very sharply there. We need to look at this in more detail, so let me just go back to here. And I haven't got enough data on ETX to actually show you. So here you've got, this is a monthly chart of the dollar index. This is where we currently are, the 103 level that we've looked at in the software. I'll just go back to here and show you because we've looked at this. It's easier to see in this one, obviously. So we've got 103 there, where the market's just about to come through, 103.80. We go back to here. And beyond this, I'm afraid that the next level is up here, which is going to be You can see there, 121. Will it get to it? Who knows? We're living in a mad world at the moment. Anything's possible. But if it goes to 121, and if they continue to increase rates, which I think they're going to struggle to do so. But yeah, if we accelerated, I didn't expect to get to this 123 that I marked up a few weeks ago in this monthly chart. I mean, I've been showing this for the last couple of weeks, when we were down here. But this last month, it's really piled it on, so it wouldn't be difficult to actually accelerate through up to these sorts of levels, purely on the basis of the insanity that we're seeing at the moment. We have got to take out this triple top first. Like I say, 103.80 has to be taken out first. There will be breathing spaces in between and pullbacks, but yeah, at the moment we're looking like we're going to see a ramp up of the US dollar to try and save it. But as it said in the news headline, that pride goeth before the fall of the dollar. And I think that's definitely on the cards a bit later. But at the moment, they're doing everything they can to get the US dollar up, which means the pound's going to be crushed along with the metals markets. Gold also coming under pressure. This trading down to the 78%, having broken the 1889 or 1890. So that's also moving lower. 200 moving average is now in sight. That'll take you down to 1850 and below, heading back to $1,800 an ounce. And to consider that it was only just a few weeks ago, it was $2,000. It's dropping like a stone as well, but not like silver, as we've seen in the gold silver ratio, where this is moving up sharply, as can be seen here over the last few days. We'll just change that to a daily chart. You'll see how much it's moved up, and obviously reflecting and inversely related to the physical price of silver. So yeah, it's gone from a low of 76.29 to 81.50, and a lot more to go on this as well, because we've had a high here as well of 81.79, which we could quite easily take out today, and then it leaves it free, as we've just seen, to move back up to that 126 level that we've got here. I think it's 126, yeah, there it is, 126.56. So yeah, quick look at crude oil before we finish, and this also sideways and under pressure to the downside as well, despite the fact that European countries have paid for their gas in rubles, and they've acquiesced to and capitulated to what Russia wanted. Amazing, absolutely amazing. But then if they don't, there'll be riots, because if you can't turn the gas on and there isn't any, then the government are going to see riots by the people. So there you go. What do? No sanctions to begin with would have been a good idea. But anyway, let's not get political. Okay, that's it for this one. If there's anything else to report today, I'll let you know. Keep an eye on the 1:30 news for the US GDP figures. As ever, thanks for watching. See you in the next one.